Let's talk about the affordability index for people buying a home is the worst in 50 years. Now, people may be excited about buying a home because mortgage rates, well, they've hit some low levels compared to over a year ago. But the affordability of a home is still far, far out of the reach of many people. The reason for this is we have talked about this for the past, I think, Chase, we've been talking about this for at least 2, if not 3 years, is that the increase in the price of homes has far outpaced the increase in people's income. And we've talked about this, saying housing prices can't keep going up because people's incomes aren't going up and they can't afford it.
Yeah, I think we've been talking about this now for at least 4 years, because
4
really
years.
it was during the pandemic. People were buying a house sight unseen. I mean, it really is when that price appreciation on homes got, I'm going to say, a little bit out of whack. And since then is really where that affordability index has continued to lift. And then what happened was, obviously, you had a huge cut in interest rates, which allowed prices to go up further. But then you haven't had the pullback in prices. Right. So now higher rates and higher prices, and again, not that appreciation in incomes, has led to this pretty crazy environment of having a hard time affording homes.
Right.
And I mean, speaking to the price to income, when you look over the last 50 years, the average is around 4 times, and it actually reached a low in 1999 of around 3.6 times. But again, with this rapid increase in the price of homes over the last few years, the price to income ratio has climbed to slightly over 5 times. Also not helping are the increases in home insurance costs and property taxes. Obviously, those are both going to be byproducts of the increase in home prices, because you got to repair a home if it breaks. Well, yeah, the insurance companies are going to have to pay more because home prices are elevated. Same thing with property taxes, since they're based off property values. So you're getting hit in all these different angles.
And you bring up a good point, because people don't realize that, well, gosh, my insurance went way up. That's not fair. Well, the price of housing is higher, cost of labor, materials, your property taxes are higher because of all these things. The price of the home is just not the price of the home. You got other factors related to that cost more as well. So, but kind of a comparison here. Back in 2019, the summer of 2019, when looking at households earning $75,000, again, this is nationwide, not here in San Diego, $75,000, nearly 50% of those people could afford to buy a home. Now, fast forward to today, when looking at those same households earning $75,000, well, now only 21% would be able to afford a home. Back in 2012, the affordability index was over 200, and it has now been cut in half to just about 100 with no signs. And I'm saying no signs of improving anytime soon.
Yeah, I mean, the only way to improve is you have to get a huge spike in wages, a huge cut in interest rates, or a huge fall in home prices, which I think people would welcome 2 of the 3, but just not likely that's going to happen.
Right. Well, I'll let you go ahead.
Yeah, I was going to say, because of this, it's not, again, going to change overnight. And I think it'll probably take 3 to 5 years to correct itself. If you look back at history, again, it's not like all of a sudden the affordability index is going to go from 100 to 150. It is going to take time to, I'm going to say, self-correct, because it is still based off supply and demand. And supply and demand will win in the long term. I think what is probably going to happen is incomes will increase slightly over the next 3 to 5 years, which should help with that index. And maybe the price of homes will either stay the same, or people aren't going to like this, but potentially decline slightly, which would increase the affordability index.
And I think, we read so much, we write so many different things. We did one about the new home builders. Did we post that one yet? It's going to be next week?
That'll be in 2 weeks.
2 weeks. Okay,
yes,
2 weeks.
Because we are off next week for the Thanksgiving
holiday. We're taking that week off. So there'll be no newsletter, no
live show. We're going to do our evergreen show, where it's still very valuable insight. Talk about our philosophy and so forth. But
people want to like, how do they do that?
No commentary on the news, I would say. So we're going to hold off on the new builder post until the first week of December.
But that does show a different story. It does show that, I'll just kind of tease a little bit, that prices are declining. And as you say, I think it will be a combination. People will earn a little bit more. Interest rates, I think, will come down maybe a little bit, and the price of home come down maybe a little bit. But it's not going to happen in 2 to 3 months. It's going to be a time frame. And I always say, people, if you want a home to raise your kids and a place to live, and you're going to be in there for a long time, it doesn't matter what the price of home is. But if you think you're going to buy that home and like, oh, yes, I'm going to make all this money, you're fooling yourself.
Yeah.
But what this means for people buying a home today is you should not have, as I'm saying, any aspirations of a rapid increase in the value of your home What caused the problem was during the pandemic, and Chase, you kind of pointed this out, I'll mention again, worth mentioning again, pandemic mortgage rates dropped to lows not seen in 50 years, and that pushed up demand, and the prices for homes climbed at a rapid rate. I believe this scenario is extremely extremely unlikely to play out again. I mean, it took a pandemic that we've not had. What was the last pandemic? 1918 or something?
Yeah, the Spanish flu, right?
Yeah. So it just, you're not going to have that again. And please, I mean, if you're buying a home, great thing to do to raise your family and so forth. But don't think that you're going to flip this house and this is not 2020, 2021.
I mean, I kind of look at it right where people are gonna not like what I'm gonna say here, but it's an expense. It's not an investment in many cases. When I purchased my home earlier this year, it was because I needed a place for my daughters to have a backyard to run around in, and I'm not looking at it, as you said, to double my money on my home in the next 5 years. I definitely don't think that's going to happen. And when you look at it, if you go traveling somewhere, well, you're not getting an ROI on that. That's a pure expense. I mean, at least the home, you have a little bit better,
Right.
preserving of that capital. But it is very possible that there is just not much appreciation. The big thing is that the incomes and the price of homes, they have to be somewhat correlated here. And incomes aren't going to go up 7% a year. That's not going to be healthy for the economy. So incomes might go up, maybe 3 to 4% a year, which is about what home price appreciation should be. But the problem is the valuations have gotten so extended that at best it might be 1% a year because it needs to play catch up in terms of the affordability with how far ahead of it got itself. It's kind of like when we talk about the stock market. Earnings are going to be a function of how the stock market increases. We're at this huge elevated multiple now. Earnings growth is likely, I think, going to exceed what the return is on the S&P 500 because the multiple is so high.
Right.
I think it's a very similar case now in the housing market when you look at income growth versus price appreciation.
Yeah, and you have to understand things. Let's say we're not saying don't buy a home, but understand if you're buying a home, why you're buying it. And again, you brought up a great point. I want to have a place to raise my kids, have a backyard for them. And when you're renting a house sometimes, like a year down the road, the person on that house can say, yeah, I'm going to sell it. You need to find someplace else to live. So that's the benefit of owning your home. But again, you should have no expectations of, oh, I'm going to make all this money on this house. I'm great, got to buy real estate. And please don't take from your 401k to buy a home. It just makes no sense. But